Hello guys, today I'll show you how I was able to make $2,000 in profit trading the Forex market in under 4 hours. And just for context, I'm trading with prop firms. So this is one of my accounts. As you know, I have about 3 funded accounts on Funded Next. I took that setup on my scaled up account, which is $70,000 initial capital. If I take you to my trading overview under the analytics, you'll notice that I've only taken one trade since the account was scaled up. And in this account, 1% risk is about $700, meaning with a 3R, I'm expecting to return about $2,100. Now, if you check, this is the setup. I took it on September 23rd, and I returned exactly $2,000, which is roughly about 2.8%. However, because of the commission, as you can see, it only reflected $1,983. So the same setup on 23rd of September, if I take you to my trading view, you'll come and see I had the setup here. Entry at about 12 p.m. my time is when I executed the buy setup, and it ended up closing at about 3:45 my time. So that's exactly 3 hours 45 minutes, and I had hit my take profit. And as I make this video, I wouldn't like to mislead anyone. In as much as I made this profit within just 4 hours time, I'm not trying to portray trading as a get rich quick scheme. So if somehow you're new here, I've been trading the Forex market for a long time. I'm currently in my 7th year, so I have a lot of experience in the market. I've built a strategy, I've built a system which works. I've already done a lot of self-development in terms of mastering my emotions, my psychology in the markets. And as if that's not enough, I'm also trading huge capital in the prop firm space. So I was able to return this with a 1% risk on a $70,000 prop firm account. So in as much as I made this profit within just 4 hours, this is actually a result of putting in work for the years. So without wasting time, I'll head onto the trade breakdown. This is on September 23rd. My analysis starts on the daily time frame, and I'll use the replay to give you better context of the setup. So I go back to September 23rd, which was on a Monday. And the most important thing before I decide whether I'm buying or selling is to identify the buyers in that market. Now, for the longest time, I've been going long on the JPY markets because of this long bullish run. And even though we've seen price dropping for the past about 2-3 months, still whenever it comes back to the key levels, you can see the bullish momentum kicking in. So my work is just to try to take advantage whenever I see the bullish momentum. Now, one of the ways that I identify my daily bias is using the previous day's candle. For example, most of the time whenever the previous day closes bearish, you will realize there's a high chance you might see sellers coming in for a few days. And most of the time whenever we have a bullish candle on the daily time frame, we might see buyers coming in for a few days. So after seeing this previous day closing bullish on Friday, the next day, which is now Monday, that was the 23rd of September, I was anticipating a possibility of the buyers trying to push price higher. Now remember, my goal is not to be right on the long-term direction, because as you will notice by the time I'm done with this analysis, in fact, that day ended up finishing with a bearish candle. But what matters is I can get my intraday setup. My setup is very short term. I'm only looking for a setup with a 15 pip stop and a 45 pip target. So even if the market ends up selling that day, as long as I know I was following my plan, I was respecting my entry criteria, and I got my 1:3 risk to reward setup. That's the most important thing. So I'm a very short-term trader. I'm not trying to make long-term predictions in the market. And for me, that's what I have found to be working with the experience I've gathered in the market. So without losing focus, let's mark the next day, which is 23rd of September. This is when we are now going to look for the setup on the lower time frame. Another price action mechanism that I always use is, if the previous day closed bullish, I always want my entries to be at least somewhere from the open and where the body was and above. For instance, if I'm looking for my entry on the lower time frame, I want it to be within this previous day's body where we had the momentum. If somehow on the lower time frame I find my entry below the previous day's candlesticks open, there's a high chance the daily candle will have been a bearish engulfing. So for my setups to be of high probability, I always make sure I mark the previous day's open so that I look for entries only above that level. So when you look at my chart, you'll notice I always have this line to mark the previous day's open. Then we move to the next day, which is now Monday. We head to the lower time frame. This is now when we are looking for our setup. When I head on to Monday, my trading day usually starts at about 6 a.m. my time. These are things I've backtested just to make sure I'm getting setups at the right time. So I won't be interested in the market until 6 a.m. So we can play the candles until 6 a.m. There we go. So even before I check my setup, I have to check the economic calendar. Now, as I've told you, as a short-term trader, for me, I've found trading whenever we have high impact news to be very chaotic. My setups misbehave. There is very little you can do in terms of controlling your setup because the markets can do anything. So I'm a very huge fan of trading whenever we don't have crazy fundamentals. And again, we have a lot of red folder news. So the fundamentals that I look for most of the time are CPI, PPI, interest rates. So if you look on the calendar that day, there was none of those fundamentals. If we had CPI, PPI, interest rate, even if I find the perfect setup, I won't take it, because I don't have an edge trading during such conditions. That's why as a trader, it's important to really know what is working for you, what is working for your system. Now, I've already confirmed the calendar is okay. The previous day candlestick was bullish. So we have that certainty that this current day should have some bullish momentum. And that being said, there are two things that I look for when my trading day is starting. Now, in the Forex market, you always have this series of, if the market is bullish, the market will do this expansion or the impulse move, then it will always do pullbacks. So what you'll notice is in any market that is trending, after a series of the market buying for a long time, it must have a retracement before it continues to go up most of the time. Now, that being said, when I wake up in the morning, I try to look and check, is the market at a place where it's been buying for a long time, or by the time I'm waking up, has the market done a pullback? So if by the time I'm waking up, the market has already done a pullback or a retracement, then I get my entry confirmation, I'll take that setup. But if I wake up in the morning and I find this market has already been buying for a significant number of pips without a nice retracement, I won't take any setup until I find a reasonable pullback. And again, based on my back testing, I've already defined what a reasonable pullback looks like to me. And most of the time, I just want it to come and get to key levels in the market and cover some distance just to offset this bullish imbalance. Now, if you look, this impulse price had bought for about 191 pips. Now, for someone who's looking for a 45 pip trade, if the market has bought for 191 pips, that is a lot. So if I'm looking for a 45 pip trade, I'd rather wait for a pullback before I can take my setup. And again, these are things you can study in the market. Just look at price in the past and you'll notice whenever it's going up, if you find a time when price has bought for a while, expect it to offset some of the bullish imbalance to do some correction before it can continue going up. Same thing here. It tried to offset the imbalance, went up, came back down, went up further, again tries to offset some of the bullish imbalance here, same thing here. So anytime I find the market has bought for a long time, it only makes sense that there is a high chance I might see it trying to offset some bullish imbalance before it can continue going upwards, which is the same thing as doing a retracement. Because whenever buyers have taken control in the market for a long time, you'll always see the opposite party, which is sellers, trying to also do some correction move in the market. Now, there are times when I might wait for the pullback and it doesn't happen. In that case, I won't take the setup. If it actually goes to my target and I never got the retracement first, well and good. Remember, I'm not trying to force setups. That's why if you've seen my journal, sometimes in a month I even have only 3 or 4 trades because I'm very patient and I'm only waiting for the setup that will completely fall in line with what I'm looking for. Anything that is close to that but doesn't meet my exact entry criteria, I don't risk. Now, that being said, we have to wait for a pullback. Now, I'll play the candles for you to see what happened next in this market. And as I'm looking for a pullback, the more the market pulls back, for example, right now, as you can see, already we've now had some reasonable pullback. So after I've seen that pullback coming in the market, the next thing I'll be watching for is the market to give me a W pattern, which is the same thing as a double bottom. The reason why I'm looking for a double bottom is simple. My bias is already bullish. I'm expecting this market to continue buying. However, I want to look for signs first that it's going to buy. And the first sign is to make sure I'm looking for my buy at the right level. Now, if I take a buy entry up here, this is not a perfect level to take a buy entry. There's a very high chance you're going to get stopped out if you take your trade up here. But then if I wait for the market to come and do pullback somewhere down here, then I now look for my W pattern, which signifies that we're about to see buyers, reversing the price to being bullish. Then that's a great sign for me to be taking my setup. And after looking for my W pattern, I check the previous 1 hour momentum. So the previous 1 hour candle must show signs of bulls in the market. Even if I get the perfect pattern happening at a key level, but then the previous 1 hour candle is showing me sales momentum, or rather is a bearish candle, then I won't be fancying that setup. So now that I've already seen my pullback, I'll be keen on looking for potential W patterns. And for context, let me just draw the pattern here so that in case it happens, you'll be able to notice how that pattern looks like, something like this. Now, the pattern can either be perfect or it can have one of the bottoms being lower than the other. It could be the first bottom could be lower or the second bottom could also be lower. regardless of how it looks like, it's still a W pattern. So let's play the candles. Market is still dropping. We now have a buy, we have a sell, we have another sell candle. I'm trying to look for a W pattern. Let me even show you how you can identify them in the real market conditions. See, right now we had a sell here, we've had a buy, we've had a sell, and currently we are having another buy. So we are almost forming a W, only that according to my rules, it must close above the neckline. So if you find any candle that closes above this neckline, then we now have our perfect W. But at the moment, this isn't perfect because it hasn't closed above the neckline. So we continue playing our candles as we have in mind. This is what we are looking for. And there we go. The next candle has completed the W. Now, let me draw it for you so that you can see how I identify these patterns real time. This is a sell, this is a bullish candle. When we have two bearish candlesticks, I take them as the same momentum because they are heading to the same side. And when you have two bullish or three, I take them as the same momentum because they are heading to the same side. Now remember, I told you the most important thing was what? That this candle should close above the neckline. Now let's zoom in further to confirm. Has this candle closed above this middle part, which is the neckline? If I check, clearly it has closed above the neckline. So now we do have our W pattern, and if I can just extract this pattern from here, you'll actually notice it is a very similar thing to what we have here. Only that this one is tiny, but if you expand it, it's just a similar thing. So now after finding my W pattern, I wait for price to come and pull back to this middle part. And when it does a pullback, I want to confirm the previous 1 hour candle has closed bullish. And if so, I'll be looking for a bullish continuation. So let's come back to our chart. The candlestick has closed at exactly, this candlestick is 11:45. So meaning it closed at about 12. So the next candle is opening at immediately 12. So when the 12 candlestick is opening, I'm expecting price to come and do what? Retest this middle part of the neckline. And as it comes to retest, the only confirmation I want now is that the previous 1 hour was bullish. So I'll now go and put my pending order here. The neckline, I'm waiting for price to come and pull back here with my stop of 15 and my TP of 45. Then I set it like that. Let's see whether the next candle came and retested. So the next candle, there we go, came and retested and opened my trade. Now, before I took the trade real time, I had to confirm the previous 1 hour candle. So the trade was executed at about 12 noon. The previous 1 hour was between 11 to 12. So I go to the 1 hour time frame and I confirm whether 11 to 12 was bullish. Now if I look at 11 to 12 without a doubt, if I'm to remove the drawings, you will see 11 to 12 was actually bullish. So there is a sign that bullish momentum is about to kick into this market. So that's how I have my confidence to execute my setup on the lower time frame. As you are seeing, there are many things I must look for. And if I can do for you further price action on this trade, this market came and did some rejection down here. Now where the rejection happened, this is a key level of support resistance from the daily time frame. If I go to the daily time frame, you'll see that where I've marked this line, if you can just scroll further in the past, you'll notice price has bounced off here severally. This is the first time we had a week bouncing off here. We had these 2 weeks bouncing off at this level. As you can see, we had another one there. We have another week bouncing off at this level. So many price touches. Let's try to go further back in time and see. Even in the past, I'm seeing we had more weeks at this level. We had another price bounce off here, another one happening there, and another one happening here. These are close to 7-8 times where price bounce off at that level. Now you see why even on the lower time frame I had more confidence to execute, because exactly where I'm finding my entry on the lower time frame, price has also bounced off at a key level of support from the daily time frame, a level that has worked for years. So at this point in time, my setup is already running. What I always do is I set my stop loss to break even if my trade hits 20 pips. So usually I'll come and measure my 20 pip mark, and then I'll come and set an alert there. But since I'm in replay mode, I can't set an alert in replay mode. So whenever price will cross this line, I'll adjust my stop loss to break even. So now let's monitor how the setup played. Next candle started to come down, came back downwards. Keep in mind we haven't adjusted our stop loss to break even yet, so the trade is still running. So as you can see, the trade went against me for a while. So now this is where psychology comes in. It continued selling against me. I was still holding the setup, went down even further. Literally, I think about 2 pips from hitting my stop loss. If you can see, let me measure that. That is exactly 1.8 pips away from hitting my stop loss. Now you see where psychology is very important in trading. When this candle is trading here, any trader would feel the need to just close out the trade because you start to count your losses and you imagine it can't work anymore. So how do you handle your psychology? My advice is always use proper risk management. I always say trade management doesn't start when your trade is running. For you to be a better trade manager where you can hold your trades well without, doing premature adjusting, like premature closing of the trade, it starts before you take your setup, whereby you condition yourself that even if this trade goes against me, I'm okay with that. And that being said, you use a risk that is suitable, such that even if it doesn't work, you've already accepted the risk before the trade starts running. So even when you see your trade 2 pips away from the stop loss, it's okay because you already accepted the risk even before the trade starts running. That's the only way you can get to a point where you have confidence in the market. Of course, apart from backtesting also, which really helps, the other aspect of psychology is proper risk management. So now the setup starts to reverse, and as you can see, by this point in time, it had hit my 20 pip mark. So on my MT5, when it hits this line, I go and adjust my stop loss to break even. So I go and change my stop loss value and I input the entry price, such that even if it reverses, it only wipes me out at break even and I don't lose anything on that trade. I don't make anything. So now I can delete the break even mark, continue to check out the setup ran. One more candle, played about for a while, started to go to my favor, and eventually I think exactly 1-2 candles later, it hit my target somewhere here. So that's exactly how I was able to return almost 3% on my $70,000 prop farm, making about $2,000 in under 4 hours in one single setup. A setup that required a lot of psychology. This is one of the things where I always say that even if you give someone who doesn't have experience your trading strategy, you can give them your strategy for free, but they still might not be able to get the same results as you. Because I know many traders who at this point in time could have closed this trade at a loss. So a trader who doesn't have experience can have the same strategy as me, but because they don't know how to manage their emotions well, they end up losing here close to 1%. And me using the same strategy, I end up hitting my target because I'm just patient, because I accept my risk before I take the trade. So I don't do any manual adjustments. I trust my system as long as my data shows me that it's profitable in the long term. So that's it for this setup, really, nothing much. My advice to you guys is, anyone who's watched my channel for a while knows that I'm usually very consistent with my type of setups. Like, I apply the same approach in the market day in, day out. And it takes me long to find my perfect setup, but then I've identified a model that can be repeated in the market. So I'll advise you guys to not complicate your trading. Try to identify a model that you can repeat. Try to identify some patterns of price behavior that you see happening in the market over and over, and use them as a starting point to try and derive a setup. Try to look for the best level of stop loss, best level of take profit. It might take a lot of testing, but then that is the only way you actually develop a model that works. One of the easiest ways to avoid making errors in your trading is using a repeatable model, because you see it happening in the market over and over until it's very difficult for me to miss my setup. In fact, any setup that I've missed in the market is because I wasn't on my chart. But a setup can't happen, then I miss it because I didn't see it while I was on my chart, because I've mastered the kind of price behavior I'm looking for. I've also backtested and proven it's been repeating itself for years. So anytime I see that repetition happening in the market, I'm confident to execute with my 1:3 risk to reward ratio setup. So don't overcomplicate your trading. Don't go for things that you have to look in the market at 10 different ways. You end up over analyzing and you still don't have confidence. Just find something simple that can be repeated. And for some of you, you might have to trade specific sessions. Maybe you can find a setup that repeats itself every day or every other 2-3 days within a certain window. Maybe it's the New York session, the London session, etc., depending on the pair you are trading. But all in all, focus to find a model that is built around a repetitive setup in the market. And your trading becomes very easy. There are days you look at your market and you know today there's nothing to do, you go about your day. There are days you wait for 2 weeks just to get your setup, but it's worth it. And that's exactly what I've been doing from zero until building 6 figures in capital. And now I'm getting to a point where I'm making 4 figures in profit just within hours. That's it for this trade breakdown. For those of you who want to trade with Funded Next, be sure to use my discount link in the description for a 7.5% discount on your Funded Next challenge. Otherwise, I'll see you next time. Peace.